This is exercise 35 in lesson 16, and this deals with premium tax credit. This is for Greg and Alice Kohler, and it's going to ask us to enter information regarding their 1095A they've received. So they have insurance, health insurance through the marketplace, which is under the Affordable Care Act, and they received a 1095A. So we want to go into the federal section. I should say actually not the federal section, but the health insurance section under federal section. And up will pop the box that asks us if we have a 1095A. Did you, your spouse, or dependent have insurance on the Affordable Care Act? Now, I've gone through this. You'll see in a moment why I've already gone through and entered values. The answer to this is yes, we've been provided that 1095A. Now it asks verify household members. In this case, all four of them are listed here as being covered under this health care, under their health care insurance. And next it says, are you allocating policy amounts with another taxpayer, or do you want to use an alternative calculation for a year of marriage? Well, no, it's none of these. We don't want any of those. Are you required to repay all of the advanced premium tax credits? That's what they would have been paid to their insurance company during the year. It says in most cases the answer is no. Only answer yes if you're not considered lawfully present in the U.S. Well, they were all lawfully present in the U.S., so the answer is no. Do all forms include coverage for January through December with no changes in monthly amounts? And the answer is no. If you look at the 1095A, there's nothing for the months of January and February. They may have gone under this. It may have been covered by an employer for the first 2 months and then went under the Affordable Care Act. We don't know. You ask them what the situation is. Why didn't they have insurance for 2 months under the through the marketplace? Now, I input this earlier because if the amounts were different, they weren't all the same from January through December, then you'll need to enter them. So I went in and I entered all these values off of the 1095A. Again, January, February were blank. March through December for this first column, column A on the form, they were all $789 a month. Second column, column B, they were $789. The third column, column C, they were $607. So these have all been added, excuse me, and there are the totals at the bottom. Now I'm going to say continue. And it comes up with a household income. It says dependents modified AGI if filing requirement. So if the dependents filed returns, tax returns, or going to file tax returns, we would need to answer this information. And so it's looking for the adjusted gross income for your dependents together, combined from Form 1040. Well, the two children, Jason's full-time student, Naomi is not, she has no income to report, so none of these will we have to fill anything in on. Again, this is only if the dependents are filing tax returns themselves, either one or both of them in this case. So we're not going to enter anything and just say continue. And we're done with the entry. Now it's going to come up and ask us for Massachusetts. There is no Massachusetts software out there right now, or not that we want to use. So we're going to skip that section. What I want to show you is the form 8962 that's generated. So inputting that data generates the form that determines how much of a credit they'll receive or how much they will have to pay back if they receive too much on the advanced premium tax credits. So we're going to do a summary print. And bear with me as we step through this. We'll have to find the form, the 8962. Print. Comes up with a return. And now we just have to scroll down until we hit the 8972. Apologize for the movement on your screen till we see it. And 8863 should be next. There it is, 8962, premium tax credit. Blow it up a little bit here so you can see it better. There it is. What do they have? Family size is 4. All 4 are being covered. There's their modified adjusted gross income, pull it from the 1040, 42,456. Then it's looking for the federal poverty line. What's the amount? The amount here is 27,750. That would be what the poverty line is at 100% for their situation. How much of it are they? Household income is a percentage of the federal poverty level. Well, they're at 152%. It's all calculated within the software. You don't have to do any of this. Basically, then it uses a percentage to determine and does a multiplication to determine how much is going to be owed back. We won't go through any of that other than to say, here's the amount they received in advance premium tax credits. Or, sorry, what they're entitled to. This, on line 25, is the advance payment of it. So this is what they were entitled to, $78.60 on line 24. What they received, what was paid directly to their health insurer without them receiving any of it, it went directly to the health insurer, was $6,070. The difference between these two is, in this case, what they receive as a credit. This credit is a refundable credit. So it says that even if they have no tax liability, they're going to receive the full $17.90. If they have a tax liability, it can be applied to that. So there's the $17.90, and that is here, and it says that it goes to Schedule 3, line 9. Remember, that's $1,790. So we're going to go up to Schedule 3 just to see the flow. And Schedule A, so the next one should be Schedule 3. There's Schedule 3. This is a refundable credit, so it's going to be in Part 2. Non-refundable are here in Part 1. Refundables here. Other payments and refundable credits. First line is the net premium tax credit, attached Form 8962, which we just looked at, and remember the amount was $17.90. There are no other additions in this section. This says enter here and in Form 1040, line 31. So we should see $1,790 on line 31 of the 1040. So now we have to skip through to the 1040. There's the 1040. Second page is where line 31 would appear. Line 31 is right here. Amount from Schedule 3, line 15. Remember the amount, $17.90. So this $17.90 is being added to other credits, like they get $3,581 for the earned income credit on line 27. They're getting $1,600 for the additional child tax credit. They're getting $995. That's what the son, Jason, is receiving for the American Opportunity Credit, educational credit. And here again is the $17.90. That gets added, and their total payments ultimately, including the $17.90, is $12,736. But again, that's where the $17.90 comes in as a refundable credit. It's paid to them whether they have a tax liability or not. And that's all this exercise was after. You could see how to enter a 1095A, the information. Also, to go check the 8962 to see how much of a credit they're receiving, or if they received too much advanced premium tax credits during the year, if too much went to the insurer, they might owe some back, all or whatever they owe back, they would have to repay. That's the end of this exercise.